If you think waiting for lower interest rates will save you money, think again. You could end up paying more, a lot more, and not less for your next house if you're waiting. Acting now, on the other hand, might be the smartest financial move you're making in 2025. Because last time we had really low interest rates, people were paying 50, 100, $150,000 over asking. They went bidding wars with numerous other offers, sometimes up to 50 other offers. They had no contingencies because the seller wouldn't allow it, because there was always somebody else who would buy the home sight unseen, literally sight unseen, with no contingencies at all. So when you think about it, would you really rather buy in a market like that than buying in a market like the one we have right now, when everything is calmer? You have time to negotiate, you have time to get um, the right deal for yourself, and obviously also maybe not paying so much over asking price. If anything, maybe even paying less than asking price. So let's have a talk about why buying at a slightly higher interest rate like the one we have right now might actually save you money in the long run, rather than buying in a frenzied low interest rate market that could end up costing you a lot of money. In this video, I'll talk about the real cost of waiting, why timing the market is risky and counterproductive, and how buying now could save you thousands in the long run. My name is Danholm, and I'm a real estate broker here in Central Florida. I've been doing this for a very long time, and I've helped a lot of people buy homes here in Central Florida. And I've actually bought and sold homes myself a lot over the last 30 years or so, even longer actually when I think about it. And I've bought and sold homes in times when interest rates were really high, and we're talking about interest rates in the 20s, and we talk about interest rates in the teens, and also bought and sold when interest rates were below 10%. And I would tell you that personally, I would much rather buy when interest rates are in the 20s than when they're in their threes and fours. And I'll get back to that a little later in this video. My aim with this video is to help you make an informed, fact-based decision on whether or not you should buy now. I'm not telling you to go out and buy a house now if you don't need to buy a house, but I am saying that if you're in a situation where your current home maybe doesn't fit your needs anymore, you need to downsize, upsize, I don't think the right decision is to wait. I think the right decision is to act now while we have a calm market. And I know many buyers, many people tell me all the time, they think that waiting for the rates to drop will make their homes more affordable. But that's not really what the reality is. First of all, rates are unpredictable and they could rise even further. Who knows if the interest rates will be lower in 12 months' time or higher? There are some predictions, which I'll also get back to later in the video. But interest rates are pretty unpredictable. So you could be waiting for something that never happens. So when do you make that decision? Do you buy when house prices have gone up by 5%, 10%, 15%? Because you've just realized the interest rates are not going to change much. I mean, they may go up a little bit, plus minus quarter percentage, but that's not really going to make a whole lot of difference to your mortgage payments. But one thing is almost dead certain if we look historically: no matter what, home prices tend to increase over time, especially in a competitive market like Central Florida. And add to that if the interest rates really were to go down, as we've seen before, it will trigger a higher demand, pushing prices up even higher. So if the prices were due to rise by, say, 3%, then they might go up by 10% if interest rates drop. So everything you saved on the rate, you're going to pay for the house. Really, in most instances, when we have really low interest rate, all you do is you pay your rate in advance in terms of a higher purchase price on your home. I mean, just look at what happened last time. Mortgage rates were historically low, and the market simply exploded. Like we talked about before, buyers found themselves in bidding wars. They were often paying up to $150,000 more than they had to for a home, more than asking price at least, just to secure a place to live. They had to forfeit all the contingencies. They had, and not just the most reasonable one, they had to forfeit anything. And like I said, some people even found themselves in a situation if they wanted a house, they had to buy it sight unseen. not because they wanted to, but because they had to, if they wanted to be in play in with the top three offers that the sellers were looking at. So yes, the rates were low. They were very low. They were in some instances they were 2%, 3%, but purchase prices were even higher. They were sky high. They were totally through the roof, which meant that whatever savings you actually had on your interest rate, you're just paying more for your house and then some. So because of this, a lot of people also stretch their budgets a little bit and are now feeling the pinch. And what do you normally do when you've been in a house a couple of years and maybe the mortgage payments are a little too much? Well, most of the times people have an option to refinance their home. But if your mortgage is already 2.5%, you really don't have that option. You don't have anywhere to go where you can get a lower rate on your home. So, or even if you go into a new 30-year loan, it's not going to save you any money because the rate's going to be so much higher than it was when you were the last time. So if you bought at that in that frenzied situation, and you now find yourself in a situation where your mortgage payments are a little too high because of whatever changes happened in your personal finances, you really only have one option, and that's to sell your home. You don't really have an option to refinance or do anything else. So lower rates definitely don't mean better deals because home prices usually rise a lot faster than the benefit of the lower rate gives you. So let's talk about the true cost of waiting here. Most experts expect home prices to go up 3 to 6% in the next 12 months. And most mortgage experts expect interest rates to only drop to between 6 and 6.5%. So waiting can actually cost you two ways: higher home prices and lost equity, or paying off your loan, if you like. If I can do an example with $500,000 home, which is sort of a pretty average home price in most areas of Central Florida. If interest rates don't change, that home, according to experts, will have gone up between $15,000 and $30,000 in the next 12 months. Which means that if you buy now, you already made $15,000 to $30,000 in the next 12 months. If you bought that home on a 30-year loan with 20% down, you will also have paid off about $12,000 in the next 12 months. So if you buy now because you want to move now, you already have made, if you like, between $27,000 and $42,000 between the money you paid off on your mortgage and the increase in value of your house. That's additional wealth you wouldn't have if you waited 12 months to buy. If rates drop to 6% in 12 months' time, you even, on top of that, have the option to refinance your home. If you refinance the mortgage balance in 6 months' time from roughly 7%, what you're paying now, to 6%, then you can actually save $1,000 a month. Then, on the other hand, if you're waiting a year but with buying your home and prices have gone up and interest rates have gone down as you expect them to, then you'll be paying $50,000 more on your home. And the real bummer here is your monthly payments on that $50,000 more expensive home would actually be roughly the same as you would have paid if you bought it $50,000 cheaper today. So the total cost in the first year alone could be as much as $62,000. If you times that up with the entire length of your loan, however long you stay in your house, we are literally talking about potentially hundreds of thousands of dollars you are leaving on the table if you wait. And what's even worse is if the rates drop even more than this to the 6%, let's say they drop to 5 or 4%, you're going to pay a lot more for that house, and you're still going to end up with roughly the same monthly mortgage payment as you're paying if you bought the house today, and you'll be behind on the savings in terms of paying off your mortgage. This is obviously all hypothetical, and it's not guaranteed any of it. It's not a prediction, and I can't promise you that this is what's going to happen. I don't know what interest rates will be in 12 months' time. I don't know what home prices will be in 12 months' time. So this is not my advice on what the future will hold. I can't tell you that. But I can tell you historically that even during the worst recessions, home prices have continued to go up. And I can also tell you with 100% guarantee, if you're buying now, you know exactly what you're going to pay. You know exactly what you're going to pay for your house. You know exactly what you're going to pay for your mortgage. If you wait 12 months, yes, there's a chance the mortgage rates could go down, and by some miracle, home prices don't go up even more than that. Or home prices could drop and interest rates stay the same, but there's no guarantee for that. Historically, the most likely outcome is that if interest rates stay the same, you're going to pay more for your home in 12 months from now. If interest rates drop, you're going to pay even more for your home in 12 months' time. If interest rates go up and they don't go up crazy, you're still going to pay more for your home in 12 months' time. You're just going to also pay more on your mortgage. So the safe bet, in my personal opinion, would be to buy now. If you're looking for financial advice, that's not what I'm trying to give you. But I'm giving you my personal opinion as a real estate broker as to what I think will happen in the next 12 months and as to what I think is the best outcome. So this is not meant to be any kind of financial or tax advice. Just saying, just get that out of the way, because I know these days you have to have all these disclaimers in everywhere. But this is my personal opinion, and I do really think that the wisest thing to do would be to buy now. If you need to buy, if you don't need to buy, if you're happy where you are, don't change anything. So some people will also tell me, well, we will wait because our home will go up in value if interest rates drop. Yeah, that's true, but you're also going to pay more for the next house. So no matter what, it's still better if you need to move now. So if you have a home that's no longer suitable for you, it's better to make the move now rather than wait to time the market. So just a little side note here, if you like my videos, this one and the other ones I made, why don't you subscribe to my channel so you can keep up to date with everything real estate here in Central Florida, and sometimes a little beyond Central Florida. And if you want to be notified every time I upload a video, hit that little notification bell. It really doesn't bother you that much. It's just a little thing that pops up every time I upload a video, and I don't do that 5 times a day. So it won't bother you too much, but it will keep you updated on what's going on in the market here in Central Florida. So just a quick recap why buying today makes sense. You'll be locking your home purchase in at today's prices. Price increases are almost unavoidable no matter what happens to their interest rate if you look historically. So at least if you're buying now, you know exactly what you're going to pay. Even if the interest rates are a little bit higher, your home purchase will most likely cost you a lot less over time if you buy now rather than if you wait for lower rates and subsequently higher prices. Another good thing about buying now, the market is relatively calm. You avoid, in most cases, there'll be no bidding wars. In most cases, you can get all the contingencies you want, and you might even be able to get the seller to give you some concessions to help you with the purchase, or maybe even negotiate a slightly lower purchase price. On the other hand, if rates drop, as we've seen, demand will skyrocket, and it will lead to much higher competition and much higher prices, especially if the rates drop by a lot, because we all know what that did to the home prices last time. And what you can do, if the prices really drop, you can always refinance, but you cannot go back in time and buy your home at a lower price. Another good thing about buying now, that every month that you own your home, you will build equity 2 ways. You will build it by paying off your mortgage and by the monthly or at least annual increases in your home value. These are not guaranteed, I know that, but they are very likely if you look historically. So waiting will delay this wealth building opportunity for you. And if you do think that the interest rates are a little bit high right now, you could explore adjustable rate mortgages. I would strongly recommend, before you take out a variable rate or adjustable rate mortgage, I would strongly recommend that you talk to your financial advisor and your mortgage advisor about what that means for you, but it is an option. Another option would be to buy the rate down a little bit, and you might even be able to negotiate that the seller pays for that or some of that, or get some other incentives from sellers that you don't see in a high-paced market, fast-paced market. So there are certainly advantages to buy now. What happened before in 2020 and 2021 that some buyers overpaid by hundreds of thousands of dollars, and many now realize that those low rates that they thought were a good idea at the time are actually biting them in the butt, because it's very difficult for them to move. It's very difficult for them to sell and buy something else because they overpaid significantly for their home. So they have not seen the same increases in the home value as the people who bought before that increase. So I would recommend people to buy before the rates drop. And I think you know that by now. I think my advice would be, don't get caught in that cycle of low interest rates. Yes, get caught in the home of your dreams, not get caught buying the home of your dreams. I hope that all makes sense to you, and I hope I explained it in a way that is logical and understandable. But if you're still on the fence about buying right now, I would like to know in the comments, if you please, what are your biggest concerns about buying a home in today's market? Please comment below. I really would like to know. And if you disagree with what I've said here, I would also like to know, because maybe I'm totally wrong. I don't know, but either way, I would really like your comments. But in my opinion, if your current home no longer fits your needs, it's no longer the perfect home, and you feel a need to move, I don't think you should let the current interest rates hold you back. So if you're interested, contact me today, and let's see if we can find you a home that works better for you right now. And if you have any questions or want to explore your options, always contact me. All my contact info is in the description of this video, and you can contact me anytime. You'll have my cell phone number, my email in below, so just feel free to reach out at any time if you want to have a question or want to discuss any of this. And remember, like, the best time to buy real estate was 30 years ago. That's long ago. It's all gone in the past. The second best time is whenever you need or want to move. Thank you for watching. I'll see you in the next video. Bye for now.